Welcome back. Cryptocurrency prices have been falling heavily this month, with investors selling alternative assets like Bitcoin and Ethereum. Here's a look at the performance of both coins over the past 4 weeks. You can see Bitcoin down about almost 23%, while Ethereum fallen even further, down a bit over 33%. Now, these falls have likely forced some leveraged buyers to sell their positions, which has caused prices to drop even further. So what is causing this risk-off attitude amongst investors? Joining me now is Ed Carroll, the head of global markets and corporate finance at MHC Digital Group. Ed, good to see you. I mean, what do you think is causing this selling behaviour right now from investors, and is it coming mostly from institutions?
Well, thanks for having me. I think that really what's been happening is, as you sort of alluded to, there has been a clean out of leverage positions, and then there's been a bit of a snowballing of short-term bearish sentiment as a result. I think in answer to your question about institutions, I do not think it is institutions necessarily selling. I think there's only been about 6% of ETF liquidations compared to who's bought, even though most of those buyers are underwater. And I think that more broadly, we are seeing a lot of very constructive rhetoric out of the institutions relating to their attitude for Bitcoin and crypto more broadly, for sort of the next iteration of financial services infrastructure development. So I think that in the short term, things have been pretty bearish, and it's been pretty messy down here. I think we're nearly below 70,000 now. But I think that in the medium to long term, we remain very bullish. And I think I'm seeing increasing chatter from institutions who support that view as well.
Yeah, when you look long term, I mean, we've seen crypto with sharp falls before. It does usually bounce back pretty quickly. So the long-term view still seems pretty good.
Yeah, I think so. And I think more fundamentally and also more sort of optimistically, I think the difference between what we may see in the next recovery compared to previous ones is that introduction of institutional interest. I think that that is fundamentally underappreciated, the wave of capital sitting, waiting to allocate to an asset like Bitcoin as the kind of store of value and monetary alternative narrative takes shape. We keep seeing chatter that, the moment it comes off, the moment that it shows any level of increased volatility, that the narrative around digital gold or a store of value goes away. Our position is very firmly that the movement to that kind of thesis around why you'd allocate to Bitcoin takes time. And so I think what you'll see is once it finds its floor, and we don't know where the floor will be, but I suspect it'll be relatively soon. What you'll see is that it will sort of consolidate, and then once we get some more clarity, clarity out of the discussions around regulation in the US around the Clarity Act, you will see a significant green light for additional institutional allocation. And with a supply-constrained asset like Bitcoin, that bodes very well for sort of medium to long-term price action.
Yeah, looking more broadly at crypto investment markets, I mean, what are investors asking from you? What sort of decentralized assets are they currently looking for?
Well, I think the other one that everyone is very interested in hearing about at the moment is Ethereum. There has been a lot of discussion from sort of, you would have seen at the World Economic Forum in Davos and various other sort of chatter around the tokenization of global financial markets and assets. That requires an infrastructure solution, which is a blockchain-based solution, and Ethereum is probably the leader in that kind of institutional infrastructure solution to facilitate that transition. Equally, the proliferation of stablecoins as an alternative sort of payment mechanism and programmable money to facilitate access to tokenized markets really does bode well for blockchain, tokens such as Ethereum and Solana and a couple of others that really are working to provide that sort of new age infrastructure solution for the next wave of financial innovation.
Yeah, you mentioned US regulatory changes a minute ago, but how much policy and regulatory work's been happening in Australia in regards to stablecoins?
A lot is the answer. There's sort of two different legs to that question, but I think what we're sort of seeing is there is a current amendment in place for the Corporations Act to facilitate a change to allow digital asset service providers to be regulated under the Australian Financial Services Licensing Framework. In addition, there is a Payments Modernisation Act which specifically relates to stablecoins to allow stablecoins to be regulated as a tokenized as a tokenized product. So I think that there is significant momentum, and we expect that momentum to accelerate. And certainly, the last sort of 6 to 12 months, the number of institutions who are reaching out now to look at how a stablecoin can be integrated into their existing ecosystem, the way that stablecoins can disrupt global cross-border payments, point of sale, and then how stablecoins as a digital programmable money can interact with tokenized real-world assets. All those questions are questions which we've been sort of pushing onto people for a long time, but the last 6 to 12 months, particularly in Australia, with the government's support for regulating, it means that there's a lot more appetite to discuss those and look at how blockchain technology can be integrated into the existing technology infrastructure that's used.
Ed Carroll, thanks for coming on the show. Appreciate it.